So Joe, pre-riots round 2,
Yes.
what was the market
Yes,
looking
Jacob.
like?
Jacob, it's good to see you. I have not been on one of these in so long. You guys have not invited me.
We haven't had them.
And I figured since I was having a good hair day, I might as well make an appearance.
Nice.
Any disagreement?
Are you that pretentious?
You know.
Only on Fridays?
Yeah. It is good to be here, though, and the market has been going wild, so it'll be interesting to talk about it a little bit. And I think we should also talk about kind of the leasing market, too, because I think there's a lot of questions around just how everything's performing.
Right.
People having backup plans and the interest rate, mortgage interest rates. And
I saw a guy said that maybe he's lying, but he said he got 1.99 with no points.
He's lying.
Yeah.
Okay. He said it was 15-0.
Oh, we can ask Wolverine once he's done cleaning out some stuff here. But no, I haven't seen the low as 1.99. I mean, that seems really insane to me. But
I think the lowest I've seen was like 2.3 or 2.5 or something.
Yeah,
like
With
that.
no
somewhere.
points.
Yeah, I think so.
yeah,
You mentioned first 6 weeks of COVID, everybody kind of got cold feet trying to see what the hell was going on. And then it was basically a pretty quick, like a 3-week ramp up back to normal.
have we not talked since COVID?
We talked twice through the first half of COVID.
Not even a single word. It's been a while, man.
Who are you? Yeah. So what I've been telling everybody is, of course, the truth. But
It's a good place to start.
COVID hit in March, and everybody kind of shut down because nobody knew anything. So sellers didn't want you in their house, and buyers didn't want to be going into houses. And so most of my clients just kind of, gave me the email or the text or the call and said, hey, I'd like to stop for now until we see what happens. People were worried about their jobs, so on and so forth. That lasted 2, maybe 3 weeks. And then it just started to ramp up right back into normalcy. My little team, the 4 of us, were up, 30, 40, 50% to last year.
Mm-hmm.
And I think that's just because people are falling over themselves with low interest rates.
Yep.
But we have the same problem we've always had. We've had low inventory ever since I've been doing this.
Mm-hmm.
8 years of running on low inventory with historically low interest rates has carried us through COVID, I think. The clients that I've been working with, I haven't had a lot of job loss, thankfully, with them. But I think the problems from job loss from COVID are going to hit us later on in the market and later on in life here after the new year, once the election's done and everything.
Yep.
So that'll be really interesting, but given the low interest rates and given the still very low inventory, I don't see it changing anytime soon unless riots keep happening or bad news comes out about COVID or something like that. But in general, I feel like the numbers, and we don't need to get into COVID conversation too in depth, but I feel like the numbers have flattened out. I feel like people are getting confident in our ability to combat it. And now it's if we can get the rest of the political unrest and all the other stuff kind of in a good place, we think people would be in a much better mood. But
I think you probably nailed it on the head. Once the public perception and the political actions start to get closer together, it's going to feel a lot more like normal. Maybe a little different, but a lot more like normal. On the real estate market, I have heard 2 things over the last couple of months. One, that downtown condos got a lot harder, almost dried up on buyer demand. And I also heard on the commercial side, which isn't the same as residential, but it all kind of ties together as far as performance of the real estate market, that commercial is expected to have like Q4 crash basically, because that's when everyone's going to bail on their leases, get through the election, see what happens, and then the financial reports will come out and all that. So do you got any opinions on either of those topics?
Well, I can definitely give my opinion on the downtown condo market. It's where I cut my teeth starting my career, so I was pretty passionate about it back then, still am. And we've got 8 listings there right now, and traffic's been really low. The riots 2 nights ago don't help with that, of course. And it's not necessarily that they're on the properties that we have listed. It's just they're in the general vicinity, and Minneapolis is very large, but when you hear riot in Minneapolis, you assume that it affects the entire city, and a lot of times that's not the case. But it has been slow. And I was looking yesterday at just all the buildings and all the listings, and the thing that we all have to keep in mind, though, is August is historically slow. in our market. Now, we all thought with COVID and all this, we wouldn't see our normal cycles and it would be weird. But August is historically slow. So I think September will be really telling. People don't like to hear that because none of us are patient anymore.
Mm-hmm.
But September will be really telling. And if traffic is low, I imagine there's going to be a problem for the rest of the year. I think, again, once we get through the election and all that stuff, going into the spring, we're going to see the same cycles we historically have, even in the downtown market, and that stuff's going to come off the market a lot easier.
So is there like a price point differentiation? We've talked before, sub 250 or sub 3 and then over 3. It's
No.
all condos.
Yeah, and, I'm judging it off of, our 8 listings, but I'm also studying 8 buildings, right?
Yep.
We have listings from $199,000 to $585,000, and everywhere in between, $390, $430, and it's pretty consistent across the board. Now we'll see upticks on showings on some of them at certain time periods, but the conversations with sellers has been hard because just don't have a lot of answers. This is the first time we're going through pandemic combined with riots, combined with normal market activity. And then to make matters worse, everybody is seeing how hot the market is.
Right.
And it is so true. A single-family home in the burbs, single-family home in Minneapolis and St. Paul, all of them gone. I mean, multiple offers, doesn't matter how nice the property is, it's just gone. Now, people have to be reasonable with their pricing because if you overprice something, they're still sitting.
Yep.
But if you're reasonable with your pricing, things are going in multiple offers, and it's crazy. But that's just not what we're seeing in the condo market right now.
So would you, total speculation, and we can skip the question if you want to, Jordan can cut it all out, but do you think a lot of that is because of the large wave riots back in end of May and June, where a lot of people are now unimpressed with downtown Minneapolis and they're trying to get out to the burbs, so that's causing the SFH to go like that and maybe the condos to stay longer?
No, I actually don't think people are scared in leaving Minneapolis, and I don't think people are scared in not coming to Minneapolis. I think it's part of it because I think Minneapolis right now has a stigma to it, especially downtown. However, think about the reason people live downtown Minneapolis. You want to go to Twins games, you want to go to Vikings games, you want to go to restaurants, you work downtown, you want Skyway access, you want to be able to bus to work, the nightlife. Target corporate, nobody's going into the office right now. That's 10,000 people downtown that are no longer needing to go downtown.
Yep.
So the need for those people or want for those people to live downtown to be able to hang out with their friends and go to work every day isn't there anymore. Not to mention, there's no Twins games. That's 80 days a year where you have Twins games.
Yep.
So a lot of activity, vibrancy downtown. Vikings games, 8 games a year. We'll probably have them. Fans won't be allowed. And then, you got the connection to the river, but some parts of downtown, they're just not all that attractive right now. And it's not because I feel like they're unsafe. It's just...
Nothing's happening.
No. You're almost better off being in Woodbury and going to Chili's than you are living downtown because you don't even know if the restaurant's open right now.
No, that makes total sense.
And I'm a downtown guy. I love downtown Minneapolis, and my family very well knows I'd love to live down there. So I'm not putting it down by any means. I'm just being realistic about why people aren't necessarily moving there. Then on top of it, one thing we haven't talked about is COVID. What do downtown condos have? They have a ton of people. You're riding elevators, and a lot of retirees like to go there. Well, if you're older right now and you're nervous about COVID, are you really going to be comfortable living in a condo building?
Probably not.
Probably not. And
not with a 19-year-old who you don't know what they were doing last night.
Exactly. So there's just a lot of that. And then, it's not like rent rates have gotten all that great at some of these luxury buildings. It's not like they've gotten more affordable. So, all of these pressures combined, I just feel like people are like, I'm going to hold on Minneapolis for the time being. Once COVID kind of clears through and once we get some of this other stuff cleared through, or it's probably never going to be clear, but more calmed down, I think it'll go back to normal. I think it's still an appealing place to be, but, gosh, we need Twins games, we need concerts, we need river parties, we need all this stuff to come back. Otherwise, it's like, I don't necessarily want to live there right now either.
Right.
But
nothing to do.
Yep.
Well, same questions, just in the rental market. Like we heard what the the buying and selling market is looking like. What are you seeing throughout the greater metro, and then maybe Minneapolis specific if it is performing differently?
Yeah, sure. So for the most part, we are seeing a little bit of differences in the rental market for Minneapolis in comparison to other places. So places that were a little bit more affected by the riots, I can see that rental rates are a little bit lower. Especially in comparison to what I thought they were going to be, like when we had listed a couple of our condos that were kind of in like the Whittier neighborhood or nearby downtown, nearby uptown, all that kind of stuff, or just in uptown itself. We've had to make pricing concessions, not many showings. Of course, there's a huge natural slowdown in August. Generally speaking, there's like in the beginning of August, there's this big rush to try to get everything in before school.
For 9/1, yep.
Yep, exactly. But, this year is a little bit different. Not everyone's going
School's
back
from
to school.
home. You can.
Yeah, exactly. School might be from home, all that kind of stuff. So there's not as much pressure. Throughout the entire year, it's been a lot different than previous years, too, that I've seen. The biggest thing I've seen is that everyone's a lot more flaky. So not only from just showing up to showings, like that happens, too, where people just don't show up and all this kind of stuff. But it's just to such an exaggerated effect, in my opinion. And then not only that, but as you get closer to signing the darn lease, like people are like, oh, hey, I just lost my job, or which is a legitimate thing. Otherwise, some people are like, oh yeah, no, I had 3 other places I was looking at, and they don't even bother telling us, even when we ask, like, are you looking at it? No, I really love this one.
Yeah, so they're negotiating 3 contracts at the same time and then picking one.
Right.
And screwing 2.
Exactly. So people are just really hedging their bets, and I mean, I would probably do the same thing. You know what I mean? It's a little different in brokerage, where you're putting in an offer, and this is like a very
earnest money and inspection time frame and the amount of
yeah, exactly. Whereas
seriousness level
is much higher.
Skyrockets,
Exactly. Yeah, but for rentals, it's not the case. So people just kind of go through the transactions willy nilly, and sometimes it's like a day and a half goes by before they respond to us and like, hey, did you review the all this kind of stuff, and they're like, oh no, we signed already 3 days ago. I'm like, what? What the heck?
One thing too, I think I'd be curious to learn from you that I thought would be really, and I think it did get hurt initially, but Airbnb. It sounds like your Airbnbs are still functioning at a pretty high optimal rate?
Not necessarily optimal. So I do have a little bit lower. Well, I also forcibly put them a little bit lower, so then there's a little bit more demand and whatnot. But it's just more or less changed. So more people are looking for longer stays. Yeah. Whether it's like a week, whether it's like months, 3 months or whatever. People are looking to stay for that rather than all of these things that would draw. We don't have anything that draws people for
They're not coming in Friday night for the Twins game and then leaving Saturday morning.
Yeah,
Sunday.
Exactly. Yeah. So without all of these events happening, you don't have a lot. So you see a lot of people that are like, hey, I'm moving in here just to get closer to college, and so I'm in a transitional phase, or my lease at this other place starts, so I need to stay here for 2 weeks, all that kind of stuff.
Yeah.
So people still need more transitionary housing or short-term housing, but at the same time, it's not to the degree of what it was, and that might slow down too just a little bit as we get into winter, as it always does.
Yep.
And generally, it's not that it slows down necessarily; it's just that it transitions into something else, or that you need to adapt to the situation. So, I mean, it's a little less than I would if nothing happened, like COVID didn't happen or any riots. I'm sure it would be a lot higher, but. You just kind of adapt, and especially in comparison to people that have lost their jobs and everything, I'm super grateful that I have the opportunity to serve others in terms of short-term housing during a global pandemic and all that kind of stuff. Of course, making sure everything's safe for them, but having still that income source and being able to, that real estate is an essential part of life, obviously.
Did Airbnb cut you guys any slack at all? Or?
No, Airbnb has gone through a lot of different things this year. So there's people that were getting ready to do class action lawsuits against them because they unilaterally decided, and of course, in their contracts and the terms of service and all that kind of stuff, it says these are these might be subject to change at any time or whatever, right? Yeah. So of course, yeah. But when you have a host who has certain cancellation policies that were put into place, from reservations 2 months ago, and then this hits, and then you forcibly
Change their cancellation policy.
exactly, and you take that away from the host, and you are actively promoting to the guests that they should cancel due to COVID. You know, like you're then becoming more a part of the business than just becoming a platform.
Yep.
You know what I mean? So it was really rough for a lot of people. I got hit a little bit, and then they were like, okay, yeah, well, we're actually going to, refund you. So please, like, help us get some support. Once those like the PPP loans came through and all that kind of stuff, they tried to negotiate to get some government funding, so then they could refund
You guys
hosts and
eligible.
Right, exactly. And then they basically made it seem like you be almost fully refunded, or at least a greater portion of that. And then it ended up being 25% maybe, for people.
So was this more of a reaction to COVID or more of a reaction to like California's gig economy law, where they were trying to get everybody in the gig economy declared as an employee of the platform provider?
No, so that happened a little bit before COVID hit, I think. Yeah, it did. And this was more or less a reaction to COVID, and then also just Airbnb not being the best decision makers. So, I mean, they also like laid off like I think it was like almost 70% of like people that they hired, and that was a lot of it was overseas. But for the most part, like instant drop in level of service that you got from Airbnb, all that kind of stuff. It's unfortunate because I've had really good experiences with them, but I noticed it too. Like I've had guests that will book past. I've talked to you about this. They'll book past midnight.
Yep.
And then they'll try to like get into the property, and they don't look at the dates.
Right.
It's after midnight. So technically, like, what is today? The 28th. Yeah.
Yep.
So technically, if it was like 1 a.m., I have this from the 28th to the 29th.
Yep.
I can check in right now because it's the 28th.
But you don't. You said you're going to show up on the 29th.
No. At the 28th, 3 p.m. or after.
Yes.
But it's 1 a.m. So I have to like literally walk people through this. And I'm like, no, it says on the listing, it says in my messages,
Yep.
I don't know where the confusion is. And then
It's just like a hotel, right? You can't just go to a hotel at 10 in the morning when check-in's 3 o'clock.
Right.
You can ask.
You can ask, yeah. And then I get them on the phone just to try to explain it. Some people understand, but they're still pissed, of course. I'm like, hey, unfortunately I can't. Like, if I could, I would, but you'd have to pay
There's
for
somebody
tonight,
sleeping in the bed right now.
Right, so you can't, you're not going to be able to get in, all that kind of stuff. So, and then, I'm like, hey, I am more than willing to host you for that day. So if you book another Airbnb or hotel right now, and you need accommodation for tonight, as in 15 hours from now or whatever, more than happy to host you. And they're like, well, no, I think I only need it for tonight or whatever. I'm like, okay, well, unfortunately, then you need to cancel because this is more or less your failure to follow proper instructions.
They don't like hearing that either, do they?
No, they don't. I don't put it that way, I put it a little bit more nicely. But then Airbnb, like they'll give a call to Airbnb, right? And then Airbnb will like message me, and then they're like, okay, well, we'll cancel this and whatnot. You're gonna have a penalty for not being able to host them, whatever. And like I'd literally have to go through and tell walk Airbnb through why the guest. Like what happened, It's just like, no, it's ready.
It was their crap up, not yours.
I was available. I was willing. I had a conversation with them. I helped them, through everything. Why would you give me a penalty?
Right.
For, it's just crazy. Yeah, so like all this kind of stuff happens. And so for the most part, short-term rentals can be very good right now. I think it's a good opportunity to take a look at what makes sense if you're looking to get into that game. And I think it would only get better in time as we understand the impacts of COVID. If it goes away, obviously that's a huge boost.
Yeah.
And then if you make yourself in the rough times, then during the good times it's going to be real good.
I think we've hit the bottom with COVID. So anything like we might stay on the bottom for longer than any of us hope, but.
Or a new virus comes out.
Yeah, well, let's hope not.
Welcome COVID-20.
But what I want to do right now is I want to ask you guys to grab your crystal balls, because as of recording, today is Friday, Yesterday, the RNC concluded. Last week, the DNC
Concluded.
happened. So we now have the two official presidential
He owns
candidates.
An Airbnb.
Yep. So
Hey,
we're going to
bite,
go all
bite.
acronym
LOL.
crazy here. But no, so today, as of recording, is officially the first day of the
Campaign.
general election.
Yeah.
Now, I'm not asking you to give your thumbs up or thumbs down on any candidate or party or whatever, but do you guys think that the election outcome could affect the housing market, whether it's on COVID policy or just people liking it or not liking it? Like, is the housing market something that's going to have to slow down and pause for the election like some other industries do?
My nuanced answer would be yes and no. Of course, there's going to be butterfly
Are
effects.
you running for office?
Yes, of course. Yes. What can I say to not alienate, the majority of my constituency? I would say yes and no. I think that as much as people want to believe that authority figures or like prominent figures control their life, they don't. That they control the markets, they don't. They have some sort of influence, right? It's indirect influence. And of course, this indirect influence can be used in sometimes if you have like some sort of executive order or something like that, obviously.
Or Fed rates.
Or Fed, yeah. So there's, of course, levers that people can pull. But it's not going to be, unless you get into a command economy, direct over-the-top control of things. And even then, you have like black markets and all that kind of stuff. So I don't know of any like black housing markets, but like or whatever that.
Hey, New York had a black market for cigarettes, so anything could happen.
Right, exactly. So, I would say yes and no in that regards. I think that the fundamentals are good. Like everything has momentum. So the momentum that we have right now, if it doesn't fizzle out or change direction, like in the next couple days, meaning that months from now, it'll be, drastically different. Yeah, to some degree, of course, but not the majority, So that'd be my...
Yeah, I think, we're going to go through debates. We're going to go through all this information that candidates are going to put out there. And I think that's going to... Perception's reality to a lot of people. So I think whatever is said is going to have a lot of influence on people. But to Andre's point, I don't know that it's actual issues of the market itself. It's people's perception. It's kind of like COVID. COVID hits and we're like, oh my God, what is this thing? And what are we going to do? So everybody shuts down. If a candidate gets up there and says, the economy's in big trouble and, everyone's going to be out of work in 3 months and grab your seats and get along for the ride. Yeah, I imagine people are going to be like, well, I'm not going to buy a house right now. And that's those people that believe what they're saying and tie it to their personal life. And so who knows? But it will have an effect of some sort for sure. And elections always do. I think about other businesses that are related to real estate too. And I think contractors get less calls, plumbers get less calls, electricians get less calls during this time frame while people are kind of hunkered down. It's also aligns with Minnesota's slow time. So again, it's kind of like August when I'm starting to panic about the condo market a little bit. It's like, well, August is slow. November and December are slow. September and October are better months in Minnesota, just like March through May are. So when it's November and December and we're going through the finality of the election and it's slow, I think we all need to sit here and remember it, not freak out, and as realtors, especially in the market, not sit here and tell our clients, oh my God, I don't know if we're ever going to sell your home, because it's November and December.
So basically, as far as you can tell, we're on the normal roller coaster. Let's wait until we find out that it's not the normal roller coaster. And you both think it'll be some minor ancillary impact, but probably nothing
It might not be
groundbreaking?
minor. It could be major, but I don't think it'll be long-lived because it won't be the result of actual
Policy.
like stuff that's happening. It's going to be perception, and then it's just like COVID. Once the perception of COVID is, okay, we can survive this, people got right back into buying and selling homes. But of course, this is all guessing, and I don't know what either candidate will say or who will win. But if they say some pretty radical stuff, which I don't think they will, because that's not how you win, then there could be a major impact. But yeah, as of right now, I feel like we've been chugging along for a long time. There needs to be a market correction. I think COVID actually extended what would have been a market correction over the next year or two. But I've been anticipating a market correction of 5 to 8%, not 40 back in 2008. And I try to remind people that 2008 was majority driven by the mortgage industry, not the real estate industry. Mortgage industry was lending subprime loans. People were underwater on their homes and foreclosing at rapid rates because, well, they could walk away or they could give the bank $100,000 to walk away. What are you going to choose to do? Nowadays, if you lost your job and you and Aaron couldn't make your house payment, the odds of you foreclosing are very slim because you could sell it and make money.
Yeah.
And same with your properties, my house, my townhouse and stuff like that. It's like, well, I'm not going to foreclose. I'm just going to put it on the market. It doesn't matter if I'm a realtor and I save fees and stuff like that. Like, most people have a lot of equity in their homes right now. So like the people that reach out and say, I want to buy a foreclosure up in a year. And it's like,
well, you're looking at 5% off sticker price, basically.
And
nothing huge.
And if it's a true foreclosure and the bank has it now, it's not going to be like '08 when the bank just wants to salvage something.
Yep.
Nowadays, a bank can list the property and get its asking price.
Right.
They don't have to. Now, if somebody goes in and trashes it, removes all the copper piping, and takes the furnace or whatever, then you got to do something about it. But most of the time nowadays, the bank-owned properties I see, they go in there, they replace the carpet, they make sure the appliances are working, they clean the furnace, they make sure the outside's painted, and they list it for what the value should be on the market. That's what you're going to see, not banks just throwing a bunch of foreclosure inventory out there.
So let me give you an example to compare 2009 to 2020. In 2009, we tried for the first time in our lives to buy a house. And you're a St. Cloud boy. You know, over by St. Cloud Wade Park, by the line, there's, what is that, HR Pesties?
HR Pesties.
Yep. So
Good place for lunch.
Good bar.
The house right behind the wood separating fence was the one we offered on. It was listed at 52.
You'd be a raging alcoholic.
We would have also...
More so than now.
We had one kid at the time, so it was a 2-1 with a den that could
You'd have
be converted.
10 kids by now if you lived there.
And we ended up
100K in
offering
equity.
we ended up offering our highest at 58,000, and we got beat out by 15 grand on a cash offer. Compare that to now, you know, we paid, you know, $230 or whatever it was for a 4.2. Was that $50,000 house for a 2.1? Was that in line, or have we, with average 3% growth, or are houses today just way overinflated and people are just buying them at that prices because that's the market?
I know Joe is a master of St. Cloud real estate in 2009, so.
Let me paraphrase. Was 2009 in the dumpster where everything was undervalued, or was it more so where it should have been valued and there was no ridiculous market inflation?
No, I think what I'm seeing people pay for homes now can get ridiculous at times. But in general, I see the value, especially with interest rates the way they are. I mean, $1,800 a month, $1,500 a month mortgage back then is way different than a $1,500 a month mortgage now. So the inflation comes with the territory too. Interest rates back in 2009, 6% maybe, 7%. I didn't have a mortgage yet, but by 2012 they were down in the mid 3s or low 4s or whatever. So I think prices have come up because of that, but again, you're talking about way different markets, St. Francis versus St. Cloud, Minneapolis versus any of the other markets. But I don't think we are seeing the inflation we saw in like 2006 because, again, there was appraisal fraud. Nowadays,
no income verification.
Appraisers don't even want to look at you or talk to you.
They'll purposely give you a low appraisal.
They'll fog the mirror. You got to fog a mirror back in 2008 to get a loan. Now you got to go through. Now you got to go through. The fifth degree just to get even your pre-approval, which is all good stuff. And we're starting to see 0% down and some other lower credit being allowed again and stuff like that. That's scarier, but it's not to the extent it was back then. I mean,
more responsibly.
It's not tied to securities anymore, is it?
Right.
Yeah.
The Big Short.
Yeah, I love that movie.
I'll probably watch that tonight.
I thought I understood what happened in 2008, 2009, and I did. Like, I understood the top 5%.
Yep.
That movie broke it down in such an understandable way.
The one that I always bring up as part of that movie is when the guy's talking to the stripper and she owns 5 homes. And he goes, well, how are you going to pay for all those when your loan comes due in 3 years or 2 years or whatever, 1 year? And she was just like, what? What are you talking about? And he's like, well, you got to you
Gotta
got to
pay.
make whole on those.
You're on a balloon, yeah.
Your rate's going to adjust to a payment that you can't afford anymore, and she just had no clue. Nowadays, locking into an ARM is very rare because interest rates are so low, so you don't have to. But if you are, you're doing it for a specific reason, not because you're trying to buy up multiple properties necessarily. So, I think the values that I'm seeing now are pretty in line. I mean, like I said, we've lost out on offers we've written $50,000 above list, and some of those homes I'm like, I don't know how they're going to appraise, and I don't know why you pay that much, because you got to sell it eventually, and then you need the market to go even farther. But
so all of the cogs and gears are being more responsible now, which is, so even though the prices might seem like they're higher than a buyer would want to spend, I mean, because we're all cheap, it's actually looks secure and like it's responsibly done.
Yeah, I think we're doing irresponsible things now. I mean, I see them all the time, especially as a listing agent with some of the valuations that we're getting. I think some of the stuff is irresponsible. Like, people are waiving inspections, people are going $30,000 above list without appraisal protections.
That's risky.
But people are so pent up here, right? Like, they haven't been able to buy a house because they keep losing out. So you almost have to do those things to win it.
Maybe even for like a year. You
Yeah.
know? Like, it was still bad last year,
Right.
before COVID. And
Right. And so
even shorter supply.
I think I say irresponsible, but on certain homes, those things are okay. Like,
Especially if you're like an investor.
yeah,
And you know exactly what
exactly.
you're going to be
And
doing.
I wrote an offer on a home yesterday that was listed at $350, and I thought it was worth $390. So you can say we're irresponsible writing $40,000 over, but I think the list price is wrong, and it's hard to get over that hump sometimes, right? Of like, well, no, we're overpaying by $40,000. It's like, no, you're
When
not.
you probably put in
look at the comps.
an appraisal contingency, like if
Yes.
it doesn't appraise,
Yes.
we got to walk.
I do have appraisal contingency in there. I also shot the listing agent over my comps to say, here's why I'm offering what I'm offering.
Yep.
So they don't think I'm some crazy person.
Ignore everybody else. Here's my reasonable,
Yeah.
and you're not going to
And
get
he
a better.
might use those against me later on with another offer and say, oh, we can get your offer up. Look at these comps.
Yep.
Yeah.
But at the same time, I just want them to know we're being responsible, because you could sell your house. We were talking about it yesterday or the day before. You could sell your house for $500,000. But what good is it going to do? An appraiser's going to come in and say this house isn't worth $500,000, and then you're back to selling it for what the market would bear anyway. Maybe the buyer comes up with an additional $5,000 to $10,000.
Yep.
But people that remove the appraisal, I was just emailing an agent about it today. People that remove that appraisal language, I don't think do so necessarily in earnest, because let's just say you buy a house that's listed at $350, worth $350, and you're willing to pay $400. Appraisal comes back at $350. You think that buyer truly is going to come up with $50,000
To keep it at the 80-20.
Yeah.
They're going to walk away from their earnest money more than likely.
Probably.
So to me, they're not being earnest about that offer.
Right.
It's a red flag, and it's just like, stop wasting everyone's
And
time.
it's a good feeling thing,
Yeah.
If somebody offers me $50,000 more than I thought I was going to get, great,
But what are the odds of actually collecting it?
Correct. Now, if that buyer's 20% down, on same example, you know that they have $70,000 cash, they could drop to 5% down, and now they've got
lot of wiggle room.
$35,000 to work with, or I don't know if I'm doing the math right now, but,
No, but
they have math.
They can move the money around. The deal will still work. It just looks
Correct.
differently on their end.
But
It
if
doesn't
they're
affect you.
5% down conventional, I'm not judging people, but if they're putting 5% down, I don't know that they have extra cash to throw at an appraisal problem.
Yep.
I asked somebody this morning, we got an offer on a property, FHA, 3.5% down. I said, hey, if the appraisal doesn't come back, does your client have any additional funds? No, not really. I appreciate your honesty.
Yeah.
And that's what we should be,
Yep.
because I don't want to set my clients at, hey, yeah, if the appraisal doesn't come back, these clients are good to go. They'll pay the difference. I don't want to set that expectation,
Right.
because we're all in this together at the end of the day. That's why
Right.
even when people offer way over list price on my listings, I don't just and they remove the appraisal contingency, I don't just say, oh, well, we're good. I'm done with this one. I still do the same effort on with the appraiser that I would if they did have the appraisal.
Well, and you do that
contingency.
stuff because you're a guy of character and high standards. But I think it would still be prudent for more people to do that stuff, because time is money. And the longer you spend on a deal, real estate's a commission-based business.
Yeah.
You don't get an hourly, but you can figure out your hourly. And the more work you have to do to get the deal done, the lower your hourly is, the less efficient you are, and the more time it steals from you working on other deals. So it's in everyone's best interest to take these, high-class steps, even from a selfish perspective. And actually, a lot of times, I just wish more people did it.
I wish more agents stood behind their offers. For example, I wrote that offer for 40,000 above list, and I felt so strongly convicted about it that I guaranteed my portion of my commission to the deal. I said, if this appraisal comes in lower and my clients can't make up the difference, I'll eat it first. I will eat it first, and that's $10,000.
Yeah.
And I did that. I've done it three times now, but that's an offer I'm feeling convicted about. If I didn't think that offer was real, or I didn't think my clients would be willing to chip in too, I couldn't make that because I wouldn't feel good about it.
Yep. Your goal is not to spend money on every deal.
No, but I want to win. I want to win for my clients. And if, for instance, this offer goes through and I have to eat the $10,000, it won't be a happy day, but it's another happy client. It's another transaction, and I'll learn my lesson and probably never do it again.
Even with prospecting and all that, though,
do comps more often, I guess.
Yeah.
What buys customer loyalty more than showing that you put skin in the game that you didn't have to? Listen, hey, you know what? Sister-in-law, you're looking at buying a house. You should really use my guy because I don't know if I ever told you, but he took a $10,000 hit on an $11,000 commission just to make sure we got the house.
Yep. And again, it's all about your convictions. If those people wanted to write an offer for $40,000 above list, and I didn't feel it was worth $40,000 above list, I would never make that offer.
You'd guide them otherwise.
Right.
And be like, it's just the same thing on, like, if something's overpriced, underpriced,
100%.
you want to make sure that they just have the most accurate picture.
Yep.
That
and let
you
them
can
make
see.
that decision and go from there. But and I'm not sitting on this podcast encouraging real estate agents to do that, nor is it policy of mine. But I want to stand behind my buyers if I fully believe in our offer too. And I think it's an added benefit to them when we do it, and it shows that I'm behind them. I believe in it. If I just said, "Oh yeah, offer 400 on it," like where? Okay.
Why? Yep.
What if they win and we're $50,000 apart?
Right.
Nobody's making up that money, and we won't find that out for another 3 to 4 weeks.
Right.
When they're already packed up, planning where their bed's going to go, planning where their future kids might go. And now we find out we're $50,000 apart.
Right.
And now we can't buy the house. And now the seller's pissed. And now the seller probably wants to sue, even though we have it in our contract. We get our earnest money back. But what kind of consolation is your earnest money back when you can't buy the house you wanted, or you're canceling your movers and all that other crap?
Well, and I remember that was the scariest part of the whole deal. Like, the closer we got to closing day, and you were working with me a lot on buying our house, the closer we got, the more nervous I got, because it's not that there was ever any red flags on the deal, but anything could happen. Like, you could show up on final inspection, a water main burst, and now you've got $40,000 worth of damage in the basement, and the seller can be like, I'm not going to fix it. We're going to switch to an as-is, and I'm going to, whatever. So
the house burns down.
Exactly. That's just, it's like, all right, we are now
By
committed
accident.
in motion. We've already, we've registered with the new school. We've been driving for 2 weeks to this district that's an hour away from us. And then it's like, if this whole thing falls through at the 11th hour, that royally sucks.
Yeah.
So that's not when you want to be able to reassure people and be, nope, we're going to go smooth sailing.
Yep. And it makes it tough in this market to be responsible, because you're sitting there and telling buyers, like, ooh, I wouldn't necessarily go over list price for this home, but very well if they don't, they're going to lose.
Yep.
So it's kind of a balance of, like, you educate them and you let them make their own decisions, and you fight for them regardless of what decision they make. Even if you think they're making a bad decision, you share that you think they are, but then you support them regardless. And I've had that conversation with clients before where they're, they've said to me, hey, I feel like you're not supporting me on this specific topic. And it's like, no, that's private conversations amongst us.
Yes.
outwardly, I definitely am.
I
and
disagree with you,
Yes.
but you make the decision, and then I communicate that decision.
And I communicate it with conviction again,
Yep.
and I do my best to get you what you want.
Mhm.
But if I don't have an honest conversation right now about it, I'm not going to be able to sleep at night.
Well, and you'd be
knowing-
violating your agency.
Right. So a lot of times I will have private conversations with my clients, and then you go to battle. You know, you go to the war field, and you just do whatever you can to get
I've
it
had to
done for them.
explain that in the property management side. You know, tenants are our customers, landlords are our clients.
Yep.
And I've got legal duties to the landlord, and we want a good representation in the marketplace duties to the customer. I mean, there's rental laws and all
Yep.
that, but you understand what I'm saying.
Yep.
And I've had to explain to some tenants, well, you let them do this? I don't own the house. Like, I'm not going to tell you if I agree with you or not, but I guarantee you I had an honest conversation with my client.
Yeah.
They still get to decide.
Yeah.
Yep.
Yeah, and I think we've gone off on just some random tangents. I commend Jordan for trying to cut this up and to make sense of it. But I think the moral of the story is there's never been, and this is such a sales pitch, but there's never been a better time than to use a professional in real estate. For sale by owners, I see it all the time. Like, we do earn our money. I know some people sometimes are like, well, that we sold our house overnight, multiple offers, that was easy. And it's like some deals work out that
Yes.
way, and some do not. And we run around with our heads cut off, and we work 18-hour days, and we work just as hard as other people. And I think
Or
you know,
harder.
or harder. And you know, I was. This is a total joke, but Michael and I were at a appointment yesterday, and Michael used to be in the nursing field, and we were meeting with a nurse, and she very jokingly, knee-jerk reacted, said, "Oh, you're just a realtor now?" And I said, "Hey, wait a minute, we save lives."
Yeah.
And she felt so embarrassed about it, and I told her, I'm just giving you crap.
Right.
I know you didn't mean it like that, but the reality is we are just realtors, but in a market like this, when shit's chaos,
Crazy.
have us at your, especially as a buyer, you don't even pay
Right.
for our services. And as a listing agent, like, let us navigate it for
Yeah.
you. We earn our money, I promise.
Well, so
Management company too, like the VSM in that regard is set up to protect people when this chaos comes.
Yeah.
Now we're learning some of this stuff along with everybody else.
Yep.
Dr. Fauci's not sitting back in Andre's office giving
this
us
is how you do a showing.
Yeah.
He's not sitting back there. So we're learning it just like every other brokerage is learning it. But if people don't see the value in management and leasing and real estate during a pandemic,
Yep.
I mean, I can't help them.
Well, to put it another way, 90% of the business is still the same and still the stuff that you cut your teeth on and you cut your teeth on, and you've got it down pat to where you could do it asleep.
Yep.
And the good news about that is for a client, if they're inexperienced, they don't have to worry about the 90%. So you've got almost all of your mental energies that you can devote to figuring out the 10% that's different. Whereas somebody trying to do it themselves is going to have to learn it all at the same time,
Yeah.
even the stuff that nobody's got a good answer for.
Yep.
So,
Exactly.
Yep. And we didn't mean, and it wasn't my intention to take it the way of like a final sales pitch here, but I do think like of all the times in society where it'd be good to have it, even thinking about how competitive multiple offers are, if you don't have an agent, and there's more agents than us that know how to put together a
Yep.
competitive offer. I mean, a lot of my good friends in the industry are great realtors. So it's not like it's just us, but like if you aren't working with somebody and you're going through open houses and you're trying to win these properties, and you know, I get a lot of the, well, if I just work with the listing agent, I'm going to save money. Think about who the listing agent's first relationship was with. And I get that when
Even
you're
if
good
they're
at
contractual duties, of course.
dual agency, yes, you know, everybody has to keep things private, but think about all the information they've already given the sellers by the point that they've gotten to this point.
Yep.
So
That's not illegal or against contract or anything.
and
because-
the listing agent has to agree to the commission reduction to save people money, not the seller. The seller's not like, oh, you brought the buyer, I guess we're only going to pay you 4% now.
Yep.
The listing agent has to be the one to take the haircut. Now, most will because they're getting both sides and all.
they don't
of
want to
it
go
then.
back to square one.
Right. But it's not like you're on a $300,000 house, the commission's 6%. Will you save $3,000 because the listing agent might drop it to 5%? Maybe. But then should you be paying $300,000 for that house? You don't know because that listing agent can't tell you.
Right.
So like there's just I could go on forever.
Yeah.
I'm
And
going to become an
No.
alcoholic.
Well, I don't think we went into the weeds as much as as much as you think we did. I think we stayed pretty on topic for what the market looks like right now.
I could go even further in the weeds.
Yeah, I think all three of us could, and there's no beers.
Yeah, true.
So it's just
Yeah.
a danger.
Yeah, for sure.
I guess as far as the real estate, we covered future expectations regarding the election, standard cycles. We talked about what the rental market looks like in Minneapolis and greater Twin Cities. We talked about the real estate market in Minneapolis and greater Twin Cities. I guess, is there anything else that's relevant to real estate that we should really talk about right now? I haven't heard anything's going to happen with interest rates. They're probably stuck where they're at least through November. I'm not aware of any legislation or any hiccups. Hopefully we're done with riots, because that's probably the biggest potential powder keg. I mean, that could tank property values. We get another 2 or 3 rounds of riots, and Minneapolis could be donezo. But that's,
I think that's
speculation right now.
Yeah, I think there probably will be more riots, I'm sure.
Well, Britt's Pub
but,
said
yeah.
downtown is not safe for consumers right now.
Yeah, I mean, not even just like in the next couple days, but there'll probably be more eventually as well. So, the only other thing that I can think about in comparison to low interest rates and all this kind of stuff is that just the fiscal policy or monetary policy that's being promoted right now, with throwing tons of trillions and trillions of dollars into the economy, and what that'll do, not necessarily right now, but down the line, and more or less devaluing the real.
Do.
Yeah, exactly. Devaluing the real value of the property, because, of course, that will mean that the prices are going to be increasing, but that's not necessarily meaning the actual value is increasing. It's just that the price tag is
They've
along
waved
the
the
money
white
supply.
flag on inflation for sure.
Yeah, it's things are, but that might not hit for a while, as well. So, but apart from that, I think that we covered pretty much everything. Just to put it, the gist of it, there are some minor influences on the market right now that we've seen evidence of. A little bit different of the market reacting to maybe riots, current events, that kind of a thing, and then of course just standard market cycles. It's not that big of a departure from what we can normally expect. So, if someone's trying to spin it a certain way at you and really emphasize the huge changes, well, kind of take it back to reality and see that we're not really that far from where we could expect, especially considering how everything has been handled and how our daily lives have changed so dramatically in people's mental states, right? So in comparison, this is almost probably the most normal thing about life,
Right.
I think that was my biggest surprise. After that, 3 to 6 week initial period where you're like, I might be busier than I was this time last year.
I totally was.
Yeah.
I think the two groups of people that are staking a claim to making more money in the world, though, are nurses and teachers.
Yeah.
I mean,
Yeah.
if you haven't appreciated a teacher till this point, I mean, good God, I can't tell you how many parents I talk to that,
They're lamenting.
Yeah. And teachers aren't the highest paid people in the world either. And then you got nurses who are on the front lines of even non-COVID stuff, just risking COVID stuff all the time. And, their employers don't even really want to probably test them. And I don't know, it's just a goofy world. But I'm going to peace out on that comment because I could go on about this topic.
I'm going to not talk about that either because I've got strong opinions.
Spay and neuter your pets.
Yeah. Thanks, Bob. All right. Well, I think we're done on that one.
See you guys. Thanks for listening.